This is Action and Ambition, the show that takes you all over the world to share interviews with the most successful and relevant people on the planet. Hear their backstory, get the most important lessons they've learned on their road to success, and hear exclusive tips on how to implement their success in your own life. Action and Ambition is brought to you by Entrepreneur Magazine and your host, Andrew Metal.
Thank you for tuning in to the Action Ambition podcast. I am Philip Lanos, and today we are joined by Martin Macmillan. Now, he is the CEO and founder of Pollen VC, which provides flexible credit facilities to app and game developers using a data-driven lending model, which is designed from the ground up for the app economy. Now, based in San Francisco and London, they basically help developers all over the world take control of their finances and grow their business in a capital efficient way. Now, their team includes structured credit and capital markets and performance marketing specialists with in-depth knowledge of mobile app and gaming market and the growth challenges faced with that. Now, Pollen VC is backed by a group of leading private and institutional fintech investors and has diverse sources of liquidity spanning private and institutional capital providers in Europe and North America. That being said, let's turn over to Martin. Martin, how you doing?
Hi, I'm great. Thanks for having me on the show, Philip.
Yeah, absolutely. So Pollen VC, let's just get started with that, right? The name in itself, it's venture capital, right? That's number one, right?
Well, so here's the thing. When we started off, we wanted to create like this new class of capital. So originally we called ourselves Pollen Velocity Capital. Oh. The idea with Velocity Capital increases the velocity of your digital business. Without going into too much detail, we got into a few trademark disputes. And so it turns out we chose some pretty sort of popular names in there. But because of our URL, which was pollen.vc, people, particularly in the gaming development community, just started referring us to Pollen VC. And we thought, okay, we've got some brand recognition here. Do we just go with it, or do we go through a rebrand and start again? And that's what we chose to do. So worst case, yeah, when people say, oh, you're not a traditional VC, and we say, yeah, at least it starts a conversation. But just for for our little secret and for your listeners, VC was originally Velocity Capital. So we were trying to kind of raise the bar on this.
Yeah, I like that. It's definitely cool to tokenize that. Now, for me, did you always see yourself being involved in game development and app development, like way back? I mean, that's that's not where somebody always thinks about going, right? So did you see that for yourself?
No, absolutely not. So this business for me is what I think of as my career burrito, right? So I did three different things that had absolutely no correlation between the three of them, right? For some reason, I like to go and do things I know absolutely nothing about. So most recently, I set up a music remixing app, which we did in around 2012, 2013, without any kind of prior history of music, the industry, or anything else. Before, I started an enterprise software company selling testing software to banks. I did that for 9 long, hard years. And before that, I was an investment banker. I used to work in kind of short-term credit risk trading. So there's pretty much no correlation between any of these three things. But it was doing the music remixing app. All of a sudden, we launched the app. We had about $20,000 in the bank of Apple. When we launched, we were kind of pretty hand to mouth bootstrap business. And I'm thinking, hey, I've got $20,000 trapped in Apple, but because of the payment delay, you as the developer weren't seeing that revenue for up to 60 odd days. So I did what any self-respecting ex-banker guy would do. I went around all the invoice finance houses in London and tried to basically get them to advance us money against these this Apple receivable. But because we didn't have a normal kind of like the way the app stores and the ad networks work, it's not like a normal kind of invoicing relationship, right? You don't send Apple an invoice and they pay it 45 days later. All of these guys just couldn't get their heads around the way that these digital billing systems work. So all of a sudden, after probably like 6 or 7 times getting told no, I decided, we just got to stop shaking the tree. So I went back and I spoke to my wife and said, like, the music business is really hard. We're going to put it down, put it in a box. we're going to set up a digital receivables business instead. So that was the, that's the sort of, that I was the guy with a problem type of background to our business.
Yeah. Wow. No, that's epic. And for me, that's cool too, because you're not just solving your problem, you're solving pretty much everyone who's ever had that problems with your solution. And now Velocity Capital, you're right. You could go the slow way and try to figure out how to make that all happen. Or if you're in the gaming and app world, you can just talk to Pollen VC and get where you need to go, which is green light now. And that is that essentially what we're talking about here?
Yeah, pretty much. I mean, it took us, it took us a little bit of time to get going, simply because most of your app, and particularly game developers, they're super focused on making awesome products and apps and games, but they weren't really plugged into the finances, right? So when we were talking to them about receivables financing, they were like, I don't see how this fits in my business. And it was actually back in sort of 2017, we started to have some really phenomenal successes. So we had, particularly there was a Russian gaming company who became like a really, it was a really kind of pivotal moment in our business and also theirs. So what happened was they figured out that every time they were putting $1 into Facebook ads for their game, that was returning about $1.50 in lifetime value after, call it 90 days. So what they'd found is basically this investment equation that was really working, and they wanted to drink from the well because the well was available for drinking, right? The problem is they don't have enough money to put into that user acquisition cycle. So they did what most people do, is they go back to their venture capital guys and say, hey guys, we figured out this marketing formula that really works. We want to raise an equity round to put money into this printing machine. And it was actually the venture capital fund said, hey, this is a crazy way to fund your growth. You should be doing this with debt rather than equity. And I've heard of this company, Pollen VC, in London and San Francisco that do this. You should talk to them. So we started funding them around $100,000 a month. I forget the exact number. It was roughly 100K. And instead of waiting the 60 days to get paid by the platform, we were funding these guys every 7 days, and they were taking this money and rolling it straight back into more user acquisition. So over a 15-month period, that figure grew from 100,000 a month to $2.2 million a month. At which point the company got sold, right? So you sit around the table and you say, okay, so who was this a good deal for? So the founders of the company, management of the company, great, because they took no additional equity dilution and they got a great result from the exit. It was great for the venture capital fund because they didn't have to put more money in to achieve the same results, right? We came in and we provided this leverage to enable them to fund it through debt. And then, obviously, like, the ad platforms, Facebook and so on, a lot of this money was going straight to Facebook and Google bottom line, which was good for them. And it was also good for us because we were making an interest spread on ever increasing amounts of money, and really helping the entrepreneur grow. But I think the really key thing, and this is something that was like drilled into me in my early life as a banker guy in London, is around capital efficiency, right? Don't use the right form of capital for the right outcome. So if you're going to do something that's at risk, you've got some kind of crazy idea, you want to go off and build a new game and license IP and the rest of it, yeah, great, use equity funding for that. But if you're talking about putting money into a 90-day marketing cycle that's got a it's got a very, very high kind of probability rate, there's other ways to fund that. So what we're trying to do, we're on a mission to improve like the financial literacy of app and game developers, and just improve their overall financial understanding. And then when they see different ways to finance their business that aren't just equity, we can step in and we can provide capital to do that.
That is epic. That's the implications are crazy because most people do have to go through giving up equity before they can ever get a reputation of going straight to debt. So it's really cool that you provided a channel through, depending, it varies, right? Like something like a marketing plan that has a good strategy behind it. That's cool. And that to be able to do that instead of giving up liquidity, equity, that's awesome, man, that you created that channel because most people aren't going to have that conversation.
Yeah, and look, one of the other things I really love is, if you're in the United States or you're in the UK, there's lots of access to venture capital, right? You have lots of different funding options. If you're in, Latin America or Eastern Europe, whatever, there is crazy amounts of talent, crazy game dev talent, app development talent, whatever, but there's not necessarily such an evolved capital scene. So one of the things I'm really proud we've been able to do is be able to work with some of these guys who maybe can't access local venture capital scenes because the scene is just itself not very evolved. And we've been able to help some of these guys grow without having to go, without having to rely on venture capital. And my favorite stories are the guys who are like, a team of 4 guys and girls in a basement somewhere who can all of a sudden start to smash it because the app stores just offer this incredible democratization of being able to reach a global audience no matter who you are or where you are in the world. So it's really empowering. And if we can do help, we have a lot of customers in the US and the UK and places like this, but also an increasing number in Latin America and CIS countries and so on as well. So that's something I'm really pleased that we can add into the ecosystem.
I'm 100% convinced that what you're doing here is going to set a precedent for things moving forward across the board in terms of finance and venture capital in general, just capital to create things and move things, because this is the first time I'm hearing of someone who has been able to determine that this segment doesn't necessarily have to lead to giving up equity in your company or anything like that. And for me, that's really cool. And I wonder if it was in the days when you were bootstrapping your own gaming music remixing app that it all started to kind of come back to you. Is that so?
Of course. So I think the key thing about it is that because of the experience that we had doing that, you've got the in the trenches, experience of what it's like to be there, right? And so in putting together a financing product for this vertical, we built it from the ground up directly for this vertical, knowing exactly the challenges that people had, right? But if you look at you look at a bank AR facility, whatever, it's the same set of documents, no matter what segment, no matter what industry you're in, pretty much. And you have this kind of one size fits all approach that is it's a mile wide and it's an inch deep. And we turned that 90 degrees. So building this, because we understood exactly the supply chain, the challenges, we've got a lot of empathy with the developers who are actually doing this on a day-to-day basis, understanding the challenges. So what we did is we had a blank sheet of paper and we built a financing business for this direct audience from the ground up, without any of the shackles of how things had been before or whatever. So we had the luxury of a blank sheet of paper to do that on. And I think going forward for a lot of kind of financing businesses, the verticalization is really important, right? If you can show, we came across an interesting, trucking factoring business, or independent pharmacy retailers in the UK business, or all of these different things, and you'll only provide a really good kind of fit and have real empathy with your users if you've designed something with them in mind, as opposed to this like, hey, I've got one of these, take it or leave it. Type of approaches, which has been the sort of traditional financial services for either factoring, invoice finance, or bank AR type of products.
I guess it does really make sense, especially because people are looking for games, and there's enough data to be able to pull together a strategy that you can then prove concept with the marketing, like you said, the dollar versus the $1.50 return on it. And I think with games, it really makes sense, right? So being able to choose the vertical you want to do that with, and to be able to supply the capital to help take that leverage that they needed to the next level. And it's a win-win across the board. That really isn't something that people have done. And for me, just being able to have that conversation sort of sparks, like, how can we do things differently in finance across the board and other places, right? That's the kind of thinking we've been needing for a long time now, and for me, I'm wondering, do you prefer for people to reach out to you like on LinkedIn, or should they go to your website? Because I feel like anyone listening is like, how do I get a hold of this guy right now?
So they look like we have we just kind of we did a bunch of stuff on our website. So our website's there at Pollen.vc. And I always kind of respond to people on LinkedIn as well. So LinkedIn, Martin Macmillan at Pollen VC on LinkedIn. LinkedIn is an incredibly effective channel for us, and you just never know who's out there, and some of the problems. And one of the things we've seen is that, and it's a big part of our strategy, right? So we love to lead on the front foot in terms of education, right? So we have a bunch of online tools and resources. We launched this thing a couple of months ago called CFO Resources on our website. And the way we approach kind of our own kind of customer acquisition, if you like, is to be very, very heavy on education. So we do a lot of content, we do calculators, we help people figure out things for themselves using their own data. And if it happens that, when we start to model all these things out using their data and their own kind of metrics and so on, it becomes very, very clear very quickly whether you're a good financing choice for them or not. So this concept of leading from sort of consultative education and also 100% transparency, right? Sometimes in the lending markets, and you've seen this before, people try and disguise the figures, they hide things, they obfuscate all the rest of it. We are 100% straight down the line. You can only, for any kind of financial product where you've got 2 cash flows and some time in between, the only way to do it is on an interest rate basis. So people talking about, hey, I've got this fixed fee and it's only this, or hey, you just pay me back this percentage of your revenue, whatever. It's generally designed, it might sound super simple in the face of it, but we provide you the tools to unpick all of that down to a basic interest rate. If you take off your entrepreneur hat, you put on consumer hat. If you're looking at a credit card or a mortgage or a term loan for a car, you look at an interest rate. And really, this should be no different. So we believe very passionately in transparency and helping people understand. Now, if we're not the right fit, that's fine. We're not going to try and sell someone on a financial product we're not the right fit for. But we much prefer to lead them on a journey thinking, you know what, I'm leaving money on the table by not working with you guys, and therefore I'm going to reach out, or we have some connections in common, and we also work with a bunch of different venture funds as well. So the VC funds like it, us providing effectively leverage alongside their investment that makes their money work harder and go faster. So that's another interesting source of deal flow for us.
I love it, especially because if Apple had released the new iOS that they're releasing for iPads, and they've added the ability to not only educate but code directly on the iPad now, and so a lot more people are going to, and it's through learning how to code a video game and such, and so people are going to be doing that a lot more. And I have a feeling if we can find a way to then use that, and people who've seen videos like that about what Apple's doing with the coding thing and helping people learn how to code video games, and combine that with some direct targeting, some remarketing targeting kind of thing. I think what's going to happen is you're going to find a lot more people are going to want to sign up for that. That level of transparency is unheard of, like you pointed out. And I see nothing but good things coming from that. That being said, in the sake of, in the interest of time, because I do know we're short on time today, I do have a question that I hope you answer. And I know it seems way out of left field from what we're talking about, but I think it's going to give context ultimately. And I'll tell you why in a second after you answer. So the question is, if you could have invited anybody, dead or alive, to join us today to talk about the things we talked about, chime in and all that, dead or alive, who would it be and why?
That's a really good question. I think it would be my kids. Right, so we have 3 kids. We have a 12-year-old. My middle son is his 9th birthday today. I just got back from a family dinner, and then my youngest is 5. And really, one of the things that we're trying to do as a couple, as a family, whatever, is to instill a really good, strong work ethic in our kids. Not only to just work hard at school or rest of it, but to try and see a bigger picture where you're helping people achieve things, and you're doing it in a fair, you lead with fairness, transparency, honesty, whatever. So we regularly have the sort of, hey, what do you want to be when you grow up type of discussions. And you see lots of crazy stuff and all the rest of it. But we're starting, particularly with my older one, starting to do things where you can you can help people. And I think it's fine. You can still help people and make money from it. I think that's totally fine. But if you work from a position of kind of, you're paying it forward, So you are able to, to provide stuff that is interesting and helpful to people, and then it comes around and it's helpful to you, down the track. Then that's good. But helping, I think so I think some of the principles that we kind of run our business by around, fairness and transparency and education and, just being there for people. I mean, sometimes we might have conversations going on. I can think of one developer in Latin America. We've had an open conversation where we talk every month, every couple of months, and we try and add some value, whatever. They're not a customer, but I absolutely know when their business gets to the right shape, absolutely we're going to work with them. There's no doubt about it. So I really, and we just got back. We've been living in California for 4 years. We just got back to London last summer. And I think there was this real thing around the Californian positivity that really kind of rubbed off on me. And I don't think you ever lose it. So I'm really pleased we were able to do that. We have a team of people in California, a team of people in London, but just through COVID, it felt like the right time for us to come home. But that positivity really rubbed off on me. I think it's rubbed off on our kids as well. And I think, I'm going to try and make a point of giving them exposure to some of the things we're doing, not just the sort of, it's not just like, oh, dad's just off in his office just doing work stuff. I'm going to try and bring them into it, and then show them, show them, just try and impact some of the, the life lessons I've learned through the many, many twists and turns of doing, 3 different companies and so on over the years, and how you can try and roll that into something where you can help people and you can pay it forward.
That's really exactly the kind of context I was looking for, because it's crazy. You can see the DNA that you carry as a human and your character as an individual, the way you run your family, you run your business no different. And I think that's a reminder to anyone listening is, take a look at yourself and where you are as an individual. And that'll be usually a good reflection of why your business is in the shape that it's in, and for me, this is a perfect example of that. It's been a true pleasure getting to know you, brief though it was. It won't be the last time we chat. I'll be connecting with you on LinkedIn, Martin, but it's been an absolute pleasure. Thanks for stopping by.
Great. Thank you so much for having me on the show as well.
Thanks for listening to Action and Ambition with your host, Andrew Metal. Please leave a review and subscribe, and go to andrewmetal.com for all the exclusive lessons, behind the scenes footage, and video content of the show. Follow us on Facebook and YouTube at Action and Ambition, and we'll see you on the next episode.